Hello and welcome back to another session of Market Outlook series with me, Kavita Agrawal, the founder of EXP-Invest. Today we are here to again talk about what did Nifty do in this week, what did Bank Nifty do, how did the sectors fare against each other, and what should we expect in the next week. So without any further delay, let's move on towards the charts. So like every week, we'll again start with the 3-minute time frame. And on this 3-minute time frame, we can see the Monday activity basically started from here. It is very evident in one look that this was a pretty volatile week. We saw Nifty start movement from 19,242, which went up all the way to 19,449. That range wise, if you see, was a mere 200-point movement, not much. However, it becomes significant when you take note of the fact that Nifty has scaled this very 200-point journey not once, not twice, but thrice in this week alone. That is the reason why I call this a very volatile week. Now, the rally which we saw in Nifty today was indicated on the 3-minute time frame by way of a very solid positive positive divergence between the price and the RSI. And as we know, positive divergence is a very good indicator of an impeding rally. When this happens on the 3-minute time frame, the indication is usually for the next day's movement. Alright, so with that, let's move on to the 15-minute time frame of Nifty and see if there are any indications that we need to unravel here. So the first thing that really stands out in the recent movement is that the rally that we saw today, right after Nifty crossed this 19,350 key level, was a very strong one, and the rally actually ended exactly where the rally ended on Wednesday as well. That is the level of 19,450. So that basically gives us two key resistance levels on Nifty. One is 19,450 and the next is 19,600. If we look at the chart of 15 minutes, I don't see any reason for us to worry. In fact, if anything, I do see repeated positive divergences which indicate that an underlying bull move is building up on the index. Now to the 75-minute chart. The 75-minute chart here does not have a lot to tell except for repeating the same thing that we just concluded on the 15-minute time frame. That, my friends, this correction that we've seen starting from the level of 20,000 is nothing that you should be worried about. The underlying trend continues to be very strong. Nifty is just taking a breather. It has come down to rest near the 200 EMA on the 75-minute time frame, and I believe the bullish move is going to start soon. I know I have been telling you this for a few weeks now, but be patient, just like I'm being patient and just like Nifty is testing your patience right now. The level of 19,200 is the key support on the chart of Nifty, and as long as that remains intact, we have absolutely nothing to worry about. Now let's look at the daily time frame. On the daily time frame, we can see that support is coming in from this yellow line. This yellow line is the 50 EMA, and this line seems to be giving pretty good support to the indices. Now, as long as we continue to stay below the level of 19,600, we can expect volatility to continue, but 19,600 is the key level that we should be looking out for. And with that, let's move on to Bank Nifty. All right, 3-minute time frame. On the 3-minute time frame, we can see that the week started somewhere here, and since the week started, again, lot of volatility. One difference between Bank Nifty and Nifty's movement was that this week, after Monday's opening, Bank Nifty forged a new low, whereas Nifty did not. That being said, on Bank Nifty, the resistance of 44,800, which is the level which was reached on Wednesday, was not reached today like it was on the chart of Nifty, but still don't worry, there is this trend line which lies here at the level of around 44,000, which is lending support to the index. So personally, my opinion on banks is that if you want to make big money, then banks is not where you should go, because I believe that banks have already rallied significantly, and the market right now is going through a significant sectoral churn, and I think the chemical sector is where all the momentum is going to concentrate for the next few weeks at least. So talking about bank nifty, again we can see that on the daily time frame of bank nifty, again we have support coming in on the 100 EMA. On Nifty, we saw the support coming on the 50 EMA, but on the Bank Nifty, it's coming in from the 100 EMA. I don't expect this EMA to be breached just yet, and I think a key resistance lies at 44,800. That being said, once that resistance gets breached, I would expect Bank Nifty to scale all the way up to the previous high and beyond, up to the level of 46,750. Now on Nifty, I did not mention, but my target is 20,600 within this bull run. Now, with that, let's now move on to the inter-sector charts, the relative chart. So basically this chart, like I always say, looks very, very scary to begin with, but once you realize this is just a relative comparison of all the sectoral indices which trade on TradingView, it seems a lot more simpler. What this chart simply tells you is that against the benchmark of CNX 500, which closed around 1.5% higher this week, we can see that realty sector and the metal sectors were winners by a huge margin. They both closed nearly 5.5% and 5% higher this week, whereas the auto sector, PSE sector, commodity sectors were close behind. IT sector also managed to maintain its nose above the water. In fact, I expect the IT sector also to come into momentum soon. So I am quite bullish on the IT sector, and I have quite a lot of IT stocks given to my members in the Trade Together program as active recommendations. Now, we can see the pharma and the healthcare sector is a little bit down, so is the FMCG. But again, all these sectors also look positive. And if you have existing positions, I would suggest you continue to hold your positions, but don't exit them just yet, because I think there is still more steam left in these sectors as well. Now, about the banking sectors. Now, for the banking sectors, sure, make your positions, but don't expect very big gains there. Now, that obviously depends on specific banks, because the whole banking and finance sector is very, very stock specific. And even though they respond to sectoral headwinds and tailwinds, you have to know what you're getting into with each specific stock. So, with that, we've come to an end to the end of this market outlook session. I hope I was able to add some value to you. If you would like to connect with me, the best way to do that is to join my Telegram channel, which you will see on the screen really quickly. There you go. Okay, so this is my Telegram channel. All you have to do is go on Telegram and search for EXP-Invest in, which is basically short for my website. And how I help you is, I provide you a bunch of services like portfolio cleanup or Trade Together program, in which I help you do swing trading in the market with very well vetted, technically based swing trading setups. I tell you not just the stock and the entry price, I also tell you the target, stop loss. Most importantly, I help you in managing those positions. So that's all about today's session. I will see you again in the next Market Outlook episode next week. Until then, namaste.